Hey traders, it's John Fortune here with this week's weekly Forex forecast. I hope everybody's having a great weekend as always. We do go into next week with the DXY consolidating above the 7-year breakout, and we've seen volatility coming into markets, and we've actually seen a bit of a flight to safety because of the ongoing banking situation in the US. However, the DXY is fairly flat. Going into next week, we have FOMC, and that is likely to be the headline event next week, which dictates market direction. Okay, so a quick look at the economic calendar. You can see last week we had CPI coming out of the US hotter than expected, core CPI, and this is going to add pressure on the Federal Reserve to raise interest rates this week, despite the ongoing problems that have been facing regional banks in the US. And it is those problems surrounding the regional banks in the US which caused a flight to safety. We saw the dollar rally, and also we've seen gold rallying, and also it's putting downward pressure on the equity market. So if we jump ahead to this week, you can see coming up, we do have on Wednesday the headline event of next week, and I suspect markets are going to be pretty dull leading into this. They're probably not going to do too much leading into Wednesday. But it is expected that the Fed's going to raise by 25 basis points. I do think this is also the most likely outcome, because although we have seen major problems with the regional banks, or some of the regional banks in the US, they have other tools which they've used to address that. It doesn't necessarily require a monetary policy response. And the tools that they've used to address that are the discount window, and they have provided loans to regional banks. So I want to show you two charts here, and this is what took place last week. You may have seen this doing the rounds on social media. It is an increase in the Fed's balance sheet. However, this is not QE. This is absolutely not the same as QE, because for a start, it's for a short period of time, actually a year, and these are loans. These are collateralized loans. So it is not going to have the same effect as QE, which is essentially pumping money into the system for an indefinite period of time. So these are loans that have to be paid back. They are not going to be stimulative in the same way that QE is. And if you look at this chart here, you can see this is the use of what's called the discount window. This is where you can go to the Federal Reserve and essentially get a loan. Usually the Federal Reserve will charge a premium because they don't want to encourage banks and other institutions to use the discount window. Usually they will get credit from the market. However, if it's an emergency, they will go to the Federal Reserve, they will get credit, but they pay a premium for it. So this is not desirable. And when you see this kind of discount window use, and you can see this is greater than in 2008 and also in the crash of 2020, this is actually suggesting serious liquidity issues, because banks which cannot get the credit essentially from the market are going to the Federal Reserve, paying a premium to get the credit in an emergency scenario. And when you see this type of rally essentially in primary credit, or in the use of the discount window, this is indicative of a tightening of financial conditions. It's not stimulative. Yes, the response with loans will help out the banking system, prevent bank runs, but this is not something which can be compared to, let's say, QE, coming out of 2009 and 2010, which started the next big cycle up. So be very, very careful about this. This is in fact a sign of extreme stress. And when you have this kind of use in the discount window historically, it's because you have a liquidity freeze, and things are actually starting to, as I said, freeze up in the credit space. And very often this is followed by tightening of lending standards and historically quite a severe recession. So when we're going into next week, bear this in mind, because we've seen the response to this in a flight to safety in markets. And again, when we look at the scorecards, you will see that flight to safety playing out. And I do favor risk off setups going into next week, and especially shorting some of those commodity currencies in Forex and being long some of those risk off currencies like the yen, like the franc. And finally, going into next week very quickly as well, we do have an interest rate decision out of Switzerland and also out of the UK. So we're going to look at a number of setups in today's video, and we're going to have the ability to play some of these both ways as well. But I do favor, as I said, shorting risk on currencies like the commodity currencies and being long or buying those risk off assets like the Swiss franc and like the yen. Okay, so if we look at the scorecards for the coming week, you can see it's still the Australian dollar and the Canadian dollar, which I favor to the short side. Yes, perhaps you could look at New Zealand shorts as well, but Canadian dollar shorts, Aussie shorts are still my absolute go-to shorts in the Forex complex. And on top of that, you can see we do have the Swiss franc giving us edge to the upside, the pound and the yen. The franc is slightly weakening its score from last week. However, we do have a Swiss National Bank interest rate decision next week, so that can be played as an interest rate decision. And on top of that, the pound and the yen, these are my two favorite longs vis-a-vis the Aussie and the CAD. And again, as I said, you could look at New Zealand as well. Because we have the interest rate decision out of the US next week, we are going to look at interest rate decision setups in the US dollar. But my absolute top markets going into next week are CAD yen to the downside, Aussie yen to the downside, Aussie franc to the downside, CAD franc to the downside, and also, of course, that is based around the interest rate decision, and also pound Aussie to the upside, pound CAD to the upside. And as we looked at not too long ago, the pound or the UK also has an interest rate decision next week. So we'll look at some interest rate decision setups in the franc, the pound, and also the dollar. Okay, so let's have a look at the individual currencies, starting with the dollar. And of course, we have that interest rate decision next week, so I expect the dollar to not do much. And my view is that we're probably going to see the Federal Reserve raising rates, and we are going to see the dollar pushing higher. So I'm looking for this to consolidate. Maybe it breaks below the 7-year breakout and tests the 2-year breakout, but I'm viewing this as it currently stands as a reversal. So a failed break to the downside here, below these levels, a reversal higher, a consolidation, a retest, and then I'm looking for this move, potentially even back up to the highs over here. Obviously, it's not going to happen next week, but over the rest of the year, that is what I'm looking at in the DXY. However, this is going to come down a lot to what happens on Wednesday. So I am looking for that 25 basis points rise. I think there's more chance that the Fed goes 50 than 0, and that's not necessarily a very popular opinion, but that's based on the fact that the Federal Reserve are separating out the monetary policy response to fight inflation with the response of the discount window to secure the regional banks. So a lot of people are actually mixing the two up and saying, well, because of what's going on with the banking industry, that they have to cut rates. But actually, I think you're going to see, just as the EU did previously last week when they raised 50 basis points, I think you're going to see the Federal Reserve separating out their monetary policy response with interest rates to fight inflation, which, remember, increased. Core inflation came out hotter than expected last week. And the discount window use and the increase in the balance sheet, as we've just discussed, to combat the bank runs and the stress in the banking system. So don't be surprised to see the Federal Reserve go 25 basis points. And for me personally, I think out of the two, 50 basis points and 0, they're going to more likely go 50. But I do think we see 25 next week. Next is the euro, and of course, just really doing the inverse here as what we're looking at in the DXY. We had the 50 basis points hiking last week from the ECB. However, we didn't really go anywhere. And you can see we've got this kind of almost expanded type of pattern when you get break of the lows and the highs like this. Just very choppy price action. And I think we're unlikely to see any real movement. Maybe we go a bit higher and pull back. But into FOMC on Wednesday, I think the euro pretty much does nothing. And you can see here as well, we have broken above the major breakout. We've pulled back and tested it. So if we do get the dollar rallying, this is where you're likely to see that first pullback fail, and we'd be looking back down to the 1.03750. And if that fails, we'll be looking back down to the low. But I do think we see the euro lower. Having said that, does that mean I want to be short euros? Not really, because on a relative basis, I think we're going to see the Canadian dollar, the Aussie, and even the New Zealand underperform. So I'd rather be short those currencies next week. Next is the pound, another market which is just kind of moving sideways after the major double top breakout down here. Unless or until we break these highs, this is actually a reversal and we should be looking for further declines in the pound. Maybe we come back and test this high or the previous high over here. However, again, this is likely to be determined, the next move, by FOMC. My view is that we do continue down, we get a stronger dollar for the rest of the year, as I've been saying to you for a while. But at the moment, we're just kind of consolidating, correcting, and this is probably going to be unchanged until we go into FOMC on Wednesday. Again, if we get the pound selling off, do we want to be short pounds? Not necessarily, because we should get the New Zealand, the Aussie, and the CAD selling off faster in a risk-off environment. So again, I'd prefer to short those. Next is the Swiss franc. Now, the Swiss franc is very important because we had this major double bottom breakout, which I've highlighted for you in previous videos, and we pull back and retested. And my view has been, I've been telling you guys, I do think we're going to see the Swiss franc as one of the best performers this year. And going into next week, we have a potential 50 basis points rate hike coming from the SNB. What I'd be looking for then is that to potentially be the catalyst for the major breakout. So any pullback, any consolidation going into next week, I'm going to be looking for the 50 basis points out of the SNB, and I'm looking for that to catalyze the next run to the upside in the Swiss franc, which we've been discussing since the beginning of the year. Next is the Japanese yen. Now, the Japanese yen is heading back to the major breakout of the 0.007945. This is why I think yen longs going into next week are actually a really good play. A, we don't have the interest rate decision like we do with some of the other stronger currencies like the pound, like the franc. But B, whether the yen continues down or not, we're still very likely to at least see a pullback and a retest of the major breakout, because that's what happens. You get a breakout, pulls back, retests it. Now, my view is that we could very well see it break through here. And if we do see that, that is going to be a sign of a much bigger risk-off environment coming. And I think we could see stocks a lot lower as well. And like I said, for those of you who follow me on Twitter, I do think we are heading for quite a severe recession. And that is backed up by what we saw at the beginning of the video with the stress in the financial system and that use of the discount window exceeding 2008 and even 2020 as well, as we looked at. But again, that is more of a bigger macro view over the next 6 to 9 months. Whereas going into next week, I do think this move up in the yen does represent a good opportunity to trade this to the upside. Next is the CAD, and the CAD is the best short in the Forex major scorecards going into this week. And we've just been consolidating really since we traded into the lows, which is great because as we bounce from the lows, this is our opportunity to short. You know, as markets come down, we wait, they bounce, you short it, you book profits at the lows, then they bounce, and then you short it. So we're in that kind of opportunity to get short the CAD area after this near-term bear flag in the daily. So I'm looking for Canadian dollar shorts, and I do think we come down at least to the lows. So you pretty much have this much downside. And if you look at the Canadian dollar versus the yen, this is pretty much the opposite of what we just looked at in the yen with that room to move upwards. So CAD yen is absolutely my top market going into next week. And of course, that would be CAD yen to the downside. Next is the Australian dollar. We've been tracking this in the weekly Forex forecast videos, and I did highlight the fact that we're probably running out of road in the New Zealand, the Aussie in this area, and we've reversed since. And now all we're doing is, very much like the Canadian dollar, this kind of near-term bounce in equities and this kind of rally of risk-on currencies, all this is, as it currently stands, is a near-term correction. So any pullback is viewed as the opportunity to go short. And I am looking, as I've been saying for a while, for the Australian dollar to be coming back down to the lows over here. And finally is New Zealand dollar. I did warn at the beginning of the year this was way overdone and we're likely heading lower, and I still think we're coming back down to the lows. We're just pretty close to the beginning of this journey, so there is quite a bit more downside here, and this fits in with my overall view of a bigger risk-off move coming in the near future in markets. So any pullback should simply be viewed as an opportunity to look for shorts. And again, it's not going to come all the way down to the lows next week. It's going to take some time to do that, but I am focused now on this journey towards the lows in the New Zealand dollar, and those three commodity currencies are my favorite shorts heading into next week in the order of CAD, Aussie, and then afterwards the New Zealand dollar if you wish. Okay, so let's look at the markets themselves, starting with crude oil, and this is the watch list I have going into next week, looking not necessarily to trade all of these, but for opportunities in these markets as they appear. Last week we traded through the key area of support that was highlighted as a max profit target, and this is indicative of momentum that we are going to see further lows. And I've highlighted in gold here crude oil. Why? Because For a number of weeks, I've been neutral, and I've actually been saying to you, I'm not really interested in trading crude oil because I have no strong bias on it, and it's just kind of chopped around. I do now have a strong bias on crude oil, and I favor short, so I am looking to get involved in trading crude oil once again. So any pullback in this market, and I've left this on here because maybe we come back and retest this. This would be a good area to look for. This is going to be viewed simply as an opportunity to look for shorts. And if we come down to the 61.50 area, this would be my max profit taking opportunity in this market. Why? Yes, we can go below it, but 7 times out of 10, you're not going to do this. This is actually something that happens only really 3 times out of 10. So I would favor booking profits around the 61.50 area. Next is CAD Yen. This is my favorite market going into next week. We're a little bit choppy here, but any pullback, if we can come back and we can form a bit of a consolidation here, this is simply viewed as an opportunity to look for shorts. And I'm going to be looking down to the 94.25 area roughly. Again, it doesn't have to come down to here next week. This is just the max kind of lower bound of the probabilities of where this is likely to go. So if we do get into this area, that's where I'll be looking to book profits on this market. But any short-term opportunity to go short here, I am interested in next week. Next is Aussie Yen, also highlighted in gold, and these 3 markets are my favorite markets going into next week. Again, any pullback in this market is simply viewed as an opportunity to go short. And if we do come all the way down to the 86.50 area roughly, this is where I'd be booking profits because the chances of breaking down below here are against you. So the first franc pair we're going to look at is CAD franc, and these are in blue because these are reminding you we have those interest rate decisions affecting those currencies next week. I do favor franc long positions, and CAD franc is my first market that I really like here. We were looking for potential short opportunities in the CAD, and you can see it's pulled back, and this is exactly what we want to see. This pullback last week, this is the opportunity to start to look for shorts. And going into this week, and very often you'll see this, 1 week it will pull back, and then the next week it will go down, pull back, go down like this. So now we've had this pullback, I am looking further declines down towards the previous low here. We do have the interest rate decision, so if we start to pull back, any opportunity to go short, you would be holding through that. But if we get the 50 basis points, I do favor further downside down to the lows in CAD franc. Maybe not next week, maybe this takes a couple of weeks because it's quite a big move, but I am looking for this move now, especially as we've bounced and we're holding at the previous breakout of this consolidation. Next is Aussie franc. Last week we corrected, and this is great because this is what we're looking for. This is a market been looking to get short. We started to pull back, so any continued correction here is simply viewed as an opportunity to go short. And I'm looking down towards the previous low in Aussie franc and also onto the 0.5980 area. And again, this is with that 50 basis points hike next week. I'm looking for that franc strength to come in, and so CAD and Aussie versus the franc to the downside are my 2 favorite franc plays next week. And the final franc pair here is franc yen. Now, I've got this not highlighted. Why? Because this is essentially a plan B currency market that I'm looking at next week, and my preference is for those franc longs, so CAD franc short, Aussie franc short. But if we get, for whatever reason, say a surprise hike, maybe we get 25 basis points instead of 50, or for whatever reason we see a dovish or bearish reaction from the interest rate decision, then instead of trading CAD franc and Aussie franc, because we say, okay, well, this hasn't confirmed what the original plan is, we want that catalyst in the direction of these to get involved. But if this pulls back, for example, and we do not get that franc strength, then this would be my plan B, where you could go and look to short the Swiss franc versus the yen, because the yen is going to be that kind of anchor currency that because it's bullish, or I'm looking to be long, if any of the Swiss franc, the pound, or the dollar do not show strength from those interest rate decisions, you can look for those reversal trades versus the yen. So franc yen down, pound yen down, US dollar yen down. But these are not my primary plans. These are plan B markets that you can look to pivot to if your original plan A here doesn't actually work. So if we get down to the 140 area, this would be the short-term profit taking, max profit taking opportunity in franc yen. And there's nothing wrong with waiting until the interest rate decision takes place, because if this pulls back and then you get a weaker yen, it breaks out, you can look for a pullback and a follow through, and vice versa. If CAD franc is doing this and the interest rate decision comes out and you get strength, you're always going to have the market pulling back and consolidating before heading lower as well. So you don't have to trade the interest rate decision. You can play these both ways after the interest rate decision takes place. Next is pound CAD. I do favor pound CAD to the upside. This was a market we were looking for further advances last week, and we did push higher, and the max profit taking target has been moved up this week. So any pullback in this market, and we do have the interest rate decision, I am going to be looking for potential long opportunities into the 1.6900 area. Next is pound Aussie. I do favor pound Aussie to the upside. Again, we have that UK interest rate decision on Thursday. So what I'm going to be looking for is any pullback. I'm going to be looking for potential long opportunities into the 1.84 area. Now, if this doesn't happen between Monday and Thursday when we have the interest rate decision, then you can look for the move after the interest rate decision takes place, that rally, pull back, and then this kind of follow through into this area. And the final pound pair here is pound yen. Again, this would be if we do not get pound strength and instead we get weakness. If you start to see this consolidating and then on the interest rate decision, we get this break lower because we have a weaker pound, this would be the market I'd be looking to pivot to on a reactive, not predictive basis, down to the previous low here, roughly at the 157.25 area. And finally, we have the dollar pairs, starting with euro dollar. Now, euro dollar is really a neutral currency in the scorecards. The scorecards are actually saying stay out of euro dollar because you're likely to see choppy markets. And really, this is what we have been seeing. But going into next week, I think FOMC can change this and we could see strength or weakness coming into the dollar. So in other words, volatility coming into the dollar, which we've been lacking. So any pullback in this market next week, especially if we start to correct, say we take out the high, and then on Wednesday, we get a sell-off in euro dollar like this, kind of similar to this, then any pullback would be viewed post FOMC for an opportunity to look for shorts into the previous lows down here, roughly at 1.0520. As you can see though, euro dollar, I cover this every single week. The price action on this is not very nice. This is not actually one of my preferred markets next week. Next is US dollar CAD. Again, the top three here are all based on dollar strength. So any pullback in this market would be viewed as an opportunity to go long. I am looking for the dollar to rally post FOMC. However, if you don't want to take the interest rate decision risk beforehand, nothing wrong with waiting for the FOMC. If you get the break, look for the pullback and then a rally into the 1.3870 area roughly. Next is Aussie dollar. I am looking for further consolidation. Any pullback in this market is viewed simply as an opportunity to go short down to the previous lows here, roughly at the 0.6560 area. And again, if you don't want to get involved before the interest rate decision because the markets get volatile and you could be on the wrong side of it, nothing wrong with waiting until afterwards for a reactive trade or a post FOMC trade. And the final dollar pair here is dollar yen. And again, this is just the opposite of what we looked at here. So let's say for whatever reason, say we get a consolidation and then say we get a pause from FOMC, which I don't believe we're going to get, but let's say we did, or we had a very dovish pow and you get a sell-off in the dollar. Well, you're not going to want to trade these necessarily, but coming down and shorting US dollar yen, because the yen is actually one of the better long plays, this would actually be the better post FOMC trade if you want to short dollars. Okay, so wrapping up the video with gold, silver, and Bitcoin. You can see with the gold-silver ratio, we are kind of consolidating here. However, the overall trend is to the upside. And I do favor gold in the commodity scorecards, which we share with members. I do favor gold because gold is much higher up the scorecard than silver. Next is gold. Last week, we blasted through the target area set here. And this just shows the extent to which the volatility came into gold last week. This was a huge move. Going into this week, I only favor long positions in gold, and we have big momentum to the upside. So this is going to be a market, especially if for whatever reason we do get a dovish pow. Be looking for this to correct. And I am only going to be looking for longs into the 2040 area. And of course, gold is benefiting here as a safe haven asset, which is why, although we're seeing a similar thing in silver, it's not quite to the extent of gold, because gold really is the primary safe haven asset out of these two. Next is silver. Now going into next week, silver is a market that would be interesting to the upside along with gold, but I would really like to see the dollar weaker from Powell if I'm going to trade silver. If Powell comes out aggressive and hawkish and we see the dollar rally, you're probably going to see silver do this, and then next week that would actually be a market I'd probably be interested in shorting. But this week, it is structured to the upside near term, and this is something I'd be looking at. If we do get a consolidation and then Powell comes out and we get a dovish Powell, we start to see silver rallying, post FOMC, I would be looking up to the 23.50 area. So going into next week with gold and silver, don't forget they do have the dollar in them. So if you are going to be trading these to the upside, you do really want that tailwind of a weaker dollar. You don't really want to be fighting a hawkish pound and a stronger dollar if you're going long these markets. There's better markets to trade if we come out and we get a stronger dollar next week, i.e. euro dollar to the downside, US dollar CAD to the upside, Aussie dollar to the downside. And last but not least, we have Bitcoin. Now, Bitcoin has benefited from the spike in the balance sheet of the Federal Reserve, seeing a little bit of liquidity here, and we broke above the two major highs here. So going into next week, the problem with Bitcoin is very volatile right now, so there's a lot of risk. Although there is more reward that comes with volatility, it's greater risk and greater reward. So if you are looking to trade Bitcoin, any pullback in this area would be viewed as an opportunity to go long, and I'd be looking up to the 30,000 area. However, just bear in mind that if we are going to get a tightening of lending standards in the US and we are going to actually get risk off coming into markets, you could see Bitcoin suffer, because this is really something that benefits from risk on. And it's not entirely clear as it currently stands that we are going to get any extended period of risk on, because as I said, when you see that kind of use of the discount window, that is actually signaling a credit crisis and also a major recession just around the corner. So any long trades in Bitcoin would be short term, in my opinion. So that is it for me for this week, guys. As always, I hope you enjoyed today's video, and if you did, why not consider joining us in the room each day where I go through these markets and the setups that I'm personally looking at with members on a daily basis for over 75 markets in different asset classes, including stocks, bonds, forex, and commodities. So if you'd like to know more about the benefits of GMT membership, why not check out the link in the description below and in the pinned comment, where you can get a 2-week free trial totally risk-free. So have a fantastic weekend. I'll see you all next week.